One of the foundational truths of accounting is that every single item in a company belongs to one of 5 categories. In this video, I want to give you the most basic, easy to remember definitions for each of those categories.
The first category is asset. An asset is something I have. Okay, well maybe that's a little too simplistic, so let's at least add something valuable I have. A great example is cash. Cash is valuable, so it is considered an asset. Next up is liability, which is something I owe. Let's say if I take out a loan, I owe the bank money, so that amount I need to pay back should be recorded as a liability. Equity can be a little trickier, but in its simplest form, it's either something that got invested or my own earnings.
It's important to note that when we say something got invested, we are talking about when an outside investment comes into my company. For example, if your rich uncle hands you $1,000 and says he'd like to invest in your company, well then that outside investment coming in should be recorded as equity. And in addition, any earnings that the company retains for itself should also be recorded as equity.
So moving on, we use revenue to record when I do work. Basically, the whole reason a company exists is to make sales. So whenever I do the work that earns the sale, I record the value of that work as revenue. And the final category is expense. I record an expense whenever I use something up. For example, if I drive a company truck and I bought a year's supply of gas, every month I would record the value of how much of that gas got used up as gasoline expense. Now, before I go on, it would be irresponsible of me not to mention that the definitions I've provided here for revenue and expense are based on something called the accrual basis of accounting.
The word accrue just means to build up over time. So put simply, the accrual basis of accounting means we record revenues and expenses over time as they build up. Or, in other words, as we actually do work or actually use up resources. Because most major companies use this accrual basis of accounting, nearly all the practice problems you will encounter require you to use this method, unless otherwise stated. So that's why these definitions for revenue and expense will end up being the most useful to you.
And there you have it. Super simple definitions for the 5 categories that everything in a company belongs to. While these may be oversimplifications, these definitions are a great starting point as you begin your accounting studies. And why is that?
Well, let me ask you this. Do you think it's easier to memorize 5 things or 50 things? The fact is, during your early studies of accounting, you are going to be learning so many new terms related to business. And it would take a lot of brain power to just brute force memorize which category every single item belongs to.
So instead, if you start with these 5 simple definitions, then as you come across all these new business terms throughout the semester, you'll be able to just intuitively know which category the item belongs to. And being able to correctly identify what category an item belongs to is crucial to knowing how accountants record business transactions. So be sure to check out the next video in this series where we will dive into how accountants rely on these categories to record transactions using debits and credits. And remember, keep it casual.